Thank you very much. Welcome again to the Inside Turkey's 5th annual conference. My name is Kadir Üstün. I forgot to say my name in the morning. I'm the executive director here at SETA Foundation at Washington, D.C. I would like to warmly welcome all of you to this event once again. We have among us former and current diplomatic corps. I would like to welcome them also. We have Tugay Tuncer to represent our Turkish embassy here in Washington, D.C. We have former ambassadors Frank Ricciardone and James Jeffrey among us as well. I would like to welcome them also. Thank you very much. And we have His Excellency Mehmet Simsek, Deputy Prime Minister of Turkey, who is in town to deliver his keynote address for our annual conference. And we are very honored for his presence. And I would like to just mention that he's been the Deputy Prime Minister since November 2015. And he's responsible for the management of macroeconomic policies in Turkey. He previously served as the Minister of Finance between 2009 and 2015, and he's one of our longest-serving ministers of finance. And he was elected to the parliament in 2007, 2011, and 2015, representing the Justice and Development Party. He obviously has a very long resume. He has many accomplishments in economy, and he played a key role in Turkish economy, weathering the most recent financial crisis, among many of his achievements. So I don't feel qualified to list them all here, but we are truly honored for his presence, and I would simply like to invite him to the podium right now. Thank you very much.
Good afternoon, ladies and gentlemen, distinguished guests. I'm delighted to be in Washington, and I'm happy to be here with you. I do have a presentation, and I'll stick to the presentation. It's about Turkish story of the past decade and a half, and hopefully more about the story of the next decade. And I'll be happy to entertain questions at the end of the presentation. This morning I had a number of productive meetings. I met Treasury Secretary as well as Secretary of Commerce. We had very productive meetings. Turkey-US relations in terms of trade and investments is certainly well below where it could be. I mean, there is significant upside. We've been talking about this for years. But I would say that despite the fact that trade and investment component is well below its potential, relations between the United States and Turkey, the relationship is still a special one. And it's a relationship that is, in my opinion, much more robust, vibrant, and multifaceted than it's ever been. We live in a challenging neighborhood, difficult neighborhood, and there are many issues that we have to work. But today, I'll focus more on the economics of Turkish economic outlook and Turkish reform agenda. So very quickly, if I can get this to work. It's working here, but not there. All right, let me see if I can fix it. It seems to be working here. Okay, so we'll have a manual control. All right. So, convergence. Here, I don't mean just convergence in nominal terms. Convergence actually is a term used within the context of EU accession and post-accession process. Nominal convergence is about essentially satisfying Maastricht criteria. Here I'm more referring to real convergence, quality of institutions, adopting first-rate, first-world legislation, building capacity to implement, which are actually key to long-term prosperity. When we look at Turkey over the last decade, if you exclude China and India, Turkey has done reasonably well relative to other emerging markets, which is the good news. Of course, China and India, they've done phenomenally better than us. So if you include them, we've underperformed. But excluding China and India, Turkey has performed well, and there has been real per capita GDP convergence with EU as well as United States. If you look at this chart here, it's PPP, purchasing power parity, per capita GDP relative to EU. Over the past 13 years, we've narrowed the gap by nearly 20-25 percentage points. So if you go back to year 2000, Turkish per capita GDP was roughly about 30% of EU average. Last year, it was about 55% of EU average. And these are some other signs that we've done reasonably well in a difficult decade that included one of the worst global financial crises, sovereign debt crisis in Europe, which is our key trading partner, and post-Arab Spring conflicts in our neighborhood. As you can see, per capita GDP, whether you're looking at it on a PPP basis or current exchange rate basis or in real terms, has expanded significantly. Emerging markets are out of favor right now, and Turkey is included in that basket. If you look at emerging market universe, the last decade, it was the darling of investors. Why? Because global dollar liquidity was abundant, commodity prices were going through the roof, meaning you had super cycle of commodity prices. And emerging markets, from 1990s, from 1980s, they've learned from their mistakes. They did some reforms. So emerging markets have attracted significant capital and significant investor interest and attention. It was deservedly so. But that era is behind us. Right now, emerging markets are not doing that well. And therefore, for the first time since late 80s, I would say last year, there were significant capital outflows in tune of, this is according to some guesstimates by IIF, probably about $350 to $400 billion of outflows from emerging markets. And Turkey also experienced about net $10 billion of outflows, mainly in the form of portfolio investments. So we are faced with significant headwinds. And if you look at the big picture, emerging markets have slowed, led by China. There were fears of hard landing. We don't think that's going to be the case. US is going to normalize its monetary policy regardless of what happens outside. Maybe the magnitude of it will be affected by what's happening externally. And a combination of US dollar strength and falling commodity prices is the worst type of cocktail that you could imagine for emerging markets. And not surprisingly, we've seen emerging markets coming under huge pressure on the back of US dollar strength and weaker commodity prices. And of course, when you have all these headwinds, challenges, you also tend to get domestic political noise in emerging markets. And then you begin to think that emerging markets are on a structurally downward trend. Within this context, I just want to show you one chart which is interesting, and then I'll move back to Turkey. Pre-crisis, pre-global financial crisis, if you take GDP growth rate of pre-crisis, emerging markets would have taken only 36 years for emerging markets to catch up with developed markets, meaning for convergence. It would have taken only 36 years. Not bad, eh? I mean, in one generation, you could get there. Well, today, based on current growth rates, it will take 120 years. There you go. So, what a change in fortunes. The only way out is reforms, and that's what I would like to talk about. The story, the Turkish story, I know we haven't been in great headlines. Last few years, perception has deteriorated. Some of it is justified, some of it is not. I think the reality in Turkey is better than the perception. But still, perception counts. Perception matters. And we should address the gap, the deficit. So we're not naive. We're not saying that everything is great about Turkey. No, it's not. If it was, we wouldn't be talking about reforms. And therefore, realistically speaking, the only way out for Turkey is to go back to basics. And that means implement a structural reform agenda, revive EU accession process, and maintain healthy or sound macro policies. Post-2007, Turkey has had only one anchor, and that was the fiscal discipline. To a large extent, fiscal discipline has helped Turkey absorb external shocks, domestic shocks. But going forward, we're hoping that Turkey will have at least 3 anchors. EU accession process, which is extremely relevant in terms of rule of law, standards of democracy, and better institutions, better rules and regulations. Beyond the sphere of economics, I think this is very relevant. We cannot look up to north, east, or south for source of inspiration, for change. The only engine of change in our neighborhood is EU. And despite the difficulties that Europe has experienced over the past few years, EU still represent the best in terms of rule of law, democracy, fundamental rights and freedoms. So I think going back to basics means reviving the EU accession process, and that's exactly what we're trying to do, and I'm going to come back to that. Structural transformation. We consider it to be in 2 parts. One is usually people want to look up top-down, big macro reforms to fix problems fundamentally. Well, in the case of Turkey, this was quite relevant in 1990s because we had textbook problems. We had chronic fiscal deficits. Those deficits were monetized. We had high chronic inflation, unsustainable debt dynamics. So these were typical textbook problems that required good macro measures, reforms to address them. Today, Turkey's problems are a bit different. There are still macro issues, there are still rough spots in the Turkish economy, but it's more about low productivity. It's about where we're positioned in the value chain, global value chain. It's more about competitiveness. It's more about effectiveness of government, investment climate. So it's really more bottom-up approach that is needed to fix Turkey's problems. And that's exactly what we've done. Over the past 2 years, we've worked very hard to come up with a comprehensive structural reform agenda. And now we have 4 years ahead of us. Even if we deliver on 60%, 65% of these reforms, that should help Turkey put Turkey back on a high growth trajectory. So what are we talking about? Why do we need reforms? When the ruling party, the current ruling party, came to power, Turkey was low middle income country. And it's been there since 50s, actually since the beginning. First generation reforms that were done in 2001 and later helped Turkey move to upper middle income category. That's good news. But to avoid middle income trap, to avoid staying here for decades and decades, Turkey needs to do more. And that's where second generation, third generation reforms come in. And that's what we're talking about. So, the reform program has three components. The first component is sectoral transformation. We've identified 25 sectoral transformation. And we've unveiled them, and we're currently implementing it. The second component is, bigger, more broader structural reforms. And it's not limited to economics. It does cover judicial reform, it covers other areas. And the third one is EU accession, which I've explained is extremely relevant to long-term prosperity. Sectoral transformation. As I said, 25 transformation programs, about 1,250 micro measures, micro-level reforms. What are these? Don't worry, I'm not going to cover all the 25 sectoral transformation. But as you can see, it covers a very broad area from investment climate, shadow economy, savings, productivity, capital markets, labor market, etc. So it's a very broad range of transformation. So what is the difference between today and past? In the past, we've come up. I remember in 2007, I joined the cabinet, very excited. Moved from private sector and talk of second generation reform. I was so excited. It was in the party program, it was in the election manifesto, government program. A great wish list. And we were unable to deliver fully on that. So what is different this time around? Why should you believe that this time around we're going to do our homework? We're going to fix problems. Well, a couple of reasons. First of all, we have to do reforms if we really want to create enough jobs. Our working age population is rising at 1.7% per year. In EU 28, it's rising 0.1% a year. So 17 times faster. In OECD, working age population is rising at 0.6% a year, less than or around a third of Turkish, pace of increase. So clearly, it's a political necessity that we have to do this. So, if it isn't a wish list, do we have the government and public backing? I think there is a strong commitment. We campaigned on this front in the last. Yes, we had some election economics, but the key component in our campaign was that we have unfinished work. We have to do more reforms to move Turkey to high income sort of category. So that's how we campaigned. And I think that was an important component of our election campaign. Programs this time around were designed with inputs of all departments. So it's not like somebody like me or you sitting in one office and going through what's really great, would be great for Turkey. Actually, we set hours and hours and hours, with all relevant departments, designing all these measures. And we have created a mechanism to follow up the delivery. For the first time, we have a deputy prime minister responsible for monitoring of reforms. And the Economic Coordination Council, which I chair, will also be following up in terms of implementation. And we are committed to publish regular reports. Now, let me tell you a little bit about, that's 25 transformation programs, which is well underway. Over the next 3 to 6 months, almost all of these reforms will be sent to the Parliament. And we hope that much of that will also make it through, clear the Parliament. The first chapter is enhancing transparency and combating corruption. What does it cover? Ethics, integrity, accountability in public sector. We have a draft law on political ethical standard, ethical standards for politicians. That's going to go to the Parliament. The draft is almost ready. It will happen in the first quarter of the year. Public procurement. We are in the process of updating it in line with EU directives, eliminating the exemptions. Campaign finance disclosure. This is one important area, again, that draft is almost ready, will be forwarded to the Parliament. Zoning at municipal level. That's where, at micro level, lots of issues, Today, one key headline was that we've actually forwarded a number of our mayors to party discipline board for them to be kicked out of the party, and some of them are mayors. They use their position of influence. So clearly, this is one area we're going to push forward, and one area where we will address the gap between perception and reality. Corruption perception. Transparency International, UK-based, they publish Corruption Perception Index. In 2002, Turkey ranked 65th among 102 countries. So we are actually, perception-wise, among the 1/3 most corrupted nation in the world, or 102 country universe. That's 2002, prior to the AK Party rule. A decade later, or more than a decade later, we're now 64th among 175 countries, which, again, if you use the 175 country as a universe, we are among the least corrupted 1/3 of nations, roughly speaking. So actually, we've gone a long way. And this is not a Turkish statistics. But 64th place among 175 countries, not a good place to be. Much more progress is needed, and that's why the first chapter of reforms. Second chapter, labor market reforms. We need to create jobs. Even if we create jobs for 1 million people in Turkey, unemployment rate barely stays unchanged. If you were to create 1 million jobs in any European country, unemployment rate would collapse. Since 2007, we've created more than 7 million jobs. That's a huge achievement. Europe, during that period, has destroyed net 2 million jobs, meaning they've lost. And unemployment rate in Turkey has been sticky at around 10%. So we need to create jobs. And how do we do that? Well, that requires quite a strong effort. And that's why, we need to review, reform the severance pay, part-time work, private agencies, vocational training, etc., etc. That's one area that is difficult to do, I have to admit. Labor market reforms are always difficult to achieve. And it's going to be a litmus test for us. Hopefully, within the first quarter, a big chunk of this legislation, again, will be at the Parliament, and hopefully it will be pushed through the Parliament in the second quarter of the year, I hope. That's severance pay, one of the highest in the world. In the United States, it doesn't exist. The employment protection legislation is one of the most rigid in the world. Average weekly hours worked on the main job. Because it's difficult to hire and fire, companies making existing workers work longer hours. Just this chart tells you that if labor market was more flexible, many more people will find jobs and unemployment rate would be significantly lower. Just a very simple chart reading the other way around. Share of part-time employment is relatively low. I mean, Netherlands is one extreme. Nearly 40% of Dutch people are part-time employed. But of course, Turkey, certainly around 11%, doesn't, feature well. Labor participation rate among females is extremely low. And that's to do with education and transformation from being a rural society to an urban society. Labor participation rate among women, females, peaked back in 1950s. Why? Because in agriculture, they were hidden unemployees, but showed as employed. As people moved from rural areas to urban, with no education, with no qualification, and in the cities, working cost money. You have to get a bus, you have to have somebody take care of your children, or send them to a child care facility, whatever. So what I'm trying to say is that it's only recently that we began to boost labor participation rate among women. This is very critical. If Turkey is to achieve its potential, we have to increase that. And vocational training, compared to the past, and that includes AK Party period, we're doing well, and we're going to do more. Youth unemployment, I'll skip this. So bottom line is, we have a comprehensive labor market reform that is aimed at boosting employment and female labor participation. Investment climate. This morning, I've actually been very busy. I had two breakfasts. One was with Commerce Secretary, and the other one was US Chamber of Commerce with business community. And around the table, of course, many issues were raised. And we're aware that we're not perfect. There's a long way to go. Lots of issues to address. If we want to be among the top 10 countries, we have to clearly adopt global best practices, best standards. We can't have Turkish way and be in the top 10. Very simple, straightforward. That's why we need a new patent law. It's ready, should make it to the parliament hopefully this month. Red tape, classic. Our court system, forget about the political aspects of our judicial system, which is complicated. Even a simple business case, first stage court, it takes 420 days. So we need to find ways around this. That's where the specialized courts, out-of-court settlements, arbitration, etc. comes in. And, of course, incentives. Now, this is the World Bank. This is a good survey. World Bank looks at almost 200 countries, and they say which country has the best climate to do business, ease of doing business. In 2005, Turkey ranked 84th among 175 countries. This last year, Turkey ranked 55th among 189 countries. So significant progress, but not enough. That means we have a lot of homework to do. And we need to continue to ease doing business. Competitiveness. This is from World Economic Forum. Turkey ranked again 58th place among 122 countries back in 2006, 2007. Today it ranks 51st among 140 countries. So much better than where we were, but again, long way to go. Productivity, again, among OECD nations, we have low productivity. And in terms of value chain, unfortunately, we still have strong concentration in low and medium-low technology products. We need to boost medium-high and high technology component. All of this requires reform. R&D. R&D spending is 1% of GDP, but it was about 0.5% of GDP a decade or so ago. Would like to boost it to 1.8% over the next 3-4 years, and then to about 3% by 2023. I know this is very ambitious. The first reform package to make it to the Parliament is going to be on R&D. I chaired a meeting. We concluded the work on R&D package. It's ready. It will probably be forwarded again the next week. So we're not just talking reforms. Pretty soon you're going to see Parliament flooded with new reform bills, and hopefully we'll push them all through. If needed, the Parliament won't go to summer recess, and will work throughout entire summer, if needed, to get all these reforms through the Parliament. There's been some progress, from patent applications up 6-folds, industrial designs up 2-folds, trademark applications up almost 3-folds. And in some of these measures, we're now among the top 3 in Europe. Logistics. This is one area where we're investing very heavily in infrastructure. But we would like to move from infrastructure investments to more of a focus to make Turkey a logistical base. Public finance. We're doing well here. We almost have a balanced budget. Yes, in 2015, we had almost 0 deficit. That compares extremely favorable with other emerging markets and with EU and OECD countries. But we would like to institutionalize this. It shouldn't be dependent on individuals, or it shouldn't really be just a matter of that cycle or the other cycle. That's why an income tax reform is ready, is at the Parliament. We're going to be doing a reform on taxpayers' rights, tax procedure code, because there's been a lot of complaints on this area as well. We're going to do an expenditure review. Yes, we are prioritizing education. 25%, nearly 1/4 of our entire tax revenues are now spent on education. Can you imagine? Not many emerging markets, not even developed markets, are doing that. So our biggest spending item is education, and about 1/4 of our tax are earmarked for education. Performance-based budgeting, that's another one. This, Turkey's fiscal deficit. As I said, 2015, we had almost 0 deficit compared to 4% or over 4% for emerging markets average. That's quite an achievement. Again, if you look at debt to GDP, that's gross debt to GDP ratio, public sector debt to GDP. Turkey has about 34% and compares to 109% for OECD average, and about 94% for Eurozone, and about 44% for emerging markets average. Tax competitiveness-wise, Turkey is the 9th most tax competitive, and we have one of the lowest tax burden on corporates. Informal employment was at 52% back in 2002. Today it's down to about 35%, but 35% is still a high number. And overall share of informal economy as a percent of GDP is still running at about 1/4 of GDP. The EU average is about 18%, but best performing EU members are about 8 to 10%. So clearly there's a long way to go in terms of combating the shadow economy. Judicial reform. I'm not talking about political aspects of it, but certainly we need to have more arbitration mechanisms. So that's what we've created. We've established Istanbul as an arbitration center, and we're going to continue along that path. Specialized courts I've mentioned. We're going to change the so-called expert witness mechanism, and we're going to create new appeals court. Right now, the Supreme Appeal Court has 1 million files, 1 million cases in front of it. So we need to create more appeal courts at lower level to deal with these files. So I'm purely talking about performance economy here. Trial length, I mentioned. Education reform. Here we're talking about teachers training, performance measurement, vocational training, school-based budgeting, foreign language, because we're not good at it, and lifelong learning programs. Education really matters. And this chart tells you that the higher the level of education, the higher per capita GDP. This is log PPP, per capita GDP, meaning standardized. Schooling rates are rising very fast. Entire education, public sector education system is completely free, including universities. There are no tuition fees. Every student is entitled to either a scholarship or a loan. Every single student, no exception. Everything is financed by the government. So access to education has improved. But quality of education is still an issue. This is PISA results. Basically, the chart shows the gap between OECD average scores and Turkish score in science, in math, reading, and average. As you can see, across the board, the quality of education is improving, but is still below OECD averages. So we have to do more work on enhancing quality of education. That's one key area we're going to have to work. And our strategy is to hand over vocational training, technical schools to private sector, because they do much better job than us. In fact, in organized industrial zones, we are already paying per student for private sector to build schools and run schools. So if you establish a technical school in where industry is, you get free land, tax exemptions, and per student, you get the full coverage of cost, and you can even make money. So that's the new model. We cannot just rely on government, but we will finance it. We want more competition. Without competition, you cannot be innovative, you cannot be productive, you cannot improve quality. And that's where competition is much needed. Now, if you go back to year 2000 and look at Turkish population of 25 years and older, what you will see is that average years that Turkish population spent at school were only 5.5 years. So Turks were primary school graduates in the year 2000. It has improved now. It's closer to 8 years now. But 18 million students who are in the system today, they're going to have an average 14 years of schooling, 14, 15 years of schooling. That means tripling the length of education for population of over 25 years within a decade or two. What does that mean? It means that Turkey will, over the next 20, 30, 40 years, reap the benefits of what we are doing today. The minimum compulsory length of education now is 12 years. And if you add university, which is increasingly more people are going to universities. So equally important, a decade ago, if you go to high school, secondary school, there were only 65 girls per 100 boy students. Can you imagine? A big chunk of your female population wasn't going to school. Today, that has changed dramatically. In primary school now, we have, on a gross basis, 102 girl students per 100 boy students. And in high school, we have 95 girl students per 100 boy students. So we are actually addressing that gap. And that is key to labor force participation. And that shows, this chart shows you, among the illiterate, labor participation rate among females is only 16%. But those who are university graduates, it's 71%. So we are on the right track. The next few decades, structurally, actually, will provide a very solid foundation for higher growth and real convergence. That's why the title of my presentation. Liberalization. In 1980s, Özal has done phenomenally well. I mean, of course, I'm talking about post, multi-party democratic period. We moved from import substitution to market economy. And if today Turkey is not in the same league with Iran or Egypt, which we were, by the way, in 70s, 60s, we were in the same league. If today we're not, despite lack of natural resources, that is thanks to Özal. He's done phenomenally well. I wish we could do as much as he does. He did. In the year 2000 and beyond, we've done lots of privatizations and liberalization and more competition. That worked well. That's why Turkey moved from low middle income, being a low middle income country, to upper middle income country. Of course, we now need more reforms. So that also will continue. Energy market. We've done some deregulation, but the work is unfinished. So there is more to be done. It's one key area because energy is essential to competitiveness and long-term growth. This chart tells you that in terms of product market regulation, we have very rigidity, a lot of rigidity, and that's why, again, more reforms are needed. Public administration reform. Civil service, you don't measure their performance. You can't really make them accountable whether they provide quality service or not. That has to change. We need to move to a performance-based culture, a performance-based system. This is tough, I have to admit, but it must be done. I mean, we have to do something about it. And this is, again, one other area. EU accession process, the final chapter of my reform agenda. EU was the engine of change for Central and Eastern Europe. I think EU is a great success story, regardless of what you think of Europeans. Or EU in general. No, seriously. Because at least, I mean, look at how Poland, Hungary, Czech Republic, others have done. And the reason is EU. EU was the engine of change. Economic, political, and social transformation was driven by EU. And I have to tell you, between 2002 and 2007, a chunk of transformation in Turkey was also driven by EU accession process. So we're very grateful to having such a process. And that needs to be revived. That's key to enhancing rule of law, strengthening the standards of democracy and building quality institutions. So far, we've opened 15 chapters out of 33 chapters. Why can't we open all of them? Because there are all sorts of political blockages. I was recently in Brussels to open a chapter on economic and monetary affairs. That chapter was blocked until recently by French, because chapter is about EMU, meaning post-EU accession. It's not about EU accession, it's about adopting euro, it's about Maastricht criteria. So they said, well, we don't think Turkey should be a member, and therefore why should we even open a chapter that is associated with post-membership? That chapter is now open. It's about central bank independence. It's about good, best practices across the board in fiscal and monetary affairs. So opening of a chapter doesn't guarantee everything, but it is a journey that is so relevant. So in my view, it doesn't matter whether we become an EU member, full member or not. The journey itself is so relevant. The transformation itself is so much needed is so relevant that it doesn't really matter. And if we do everything that is required to become an EU member, and don't become an EU member and become Norway of EU, Switzerland of EU, does it really matter? EU wins, Turkey wins. But I'm absolutely convinced that Turkey needs EU, and EU even needs Turkey more. And if Turkey does what it takes, inevitably EU will have to accommodate it. So again, no need to complain about politics of enlargement. Yes, it's unfavorable. Yes, they're not maybe sincere. They're not treating us fairly. Doesn't really matter. I mean, if they did, it would have helped. But even without that, we have to push these reforms through because we need it. Our citizens deserve better standards of democracy, fundamental rights and freedoms, and, better rule of law. So here is what practically we hope to achieve with EU. We would like to expand the customs union agreement with EU to incorporate public procurement, services, agriculture, which means actually joining all the EU single market. Now this is very important, and this year we're hoping to achieve that. EU is under pressure, and now they've agreed to enhance the dialogue. It doesn't matter, whatever the reason, refugee, etc. What matters is that this will give us the opportunity to open more chapters, including chapters associated with judicial system, etc. But equally important, we would like to upgrade our customs union agreement. Why this is relevant? This is so relevant because United States is negotiating TTIP, a free trade agreement with EU. And it looks like we might be left out of it. That would be an unsustainable situation. We would like to upgrade our deal with EU and allow United States and EU to dock Turkey in this new agreement. So if you have a new deal with EU, technically speaking, the deal between EU and United States would apply to Turkey in a two-way traffic. So that's what we're trying to achieve. We're not afraid of competition. We're not. The more competition, the better it is for Turkey in terms of innovation and productivity. And we can compete with Europeans. We can compete with others. So we're very strong. EU has agreed, in return for some reforms and some, the refugee agreement, to provide visa exemption. Now, this is very important. If you have visa exemption, that means there is already freedom of movements of goods. So now you're talking about freedom of movements of people. Of course, the enhanced deal would include freedom of movements of services. And that's great. So clearly, we have a lot to be done, and practically we think this is achievable. Long-term outlook. So I talked a little bit about reforms, and this is the final bit. I'm finishing it. In the long run, what really matters in terms of prosperity, lasting per capita GDP increase, real convergence, catching up with best, most advanced countries. What really matters? What matters is quality of institutions. What matters is demographics and productivity. Now, quality of institutions, I'm not going to go through the whole chart, but from Open Budget Index to institutions by World Economic Forum, Fraser Business Regulation, Corruption Perception, Index of Economic Freedom, Ease of Doing Business, all these indices, across the board. Over the past decade or so, there has been progress. But Turkey is not where it would like to be. we are either among the best 1/3 or somewhere in the middle. More progress is needed. And the key to this is EU accession process. Yes, more reforms, EU accession process. Working age population, I mentioned earlier on. This is the picture. Working age population growth will remain in positive territory in the next 20, 30 years. In EU, it's almost flat. And that gives us a golden opportunity to narrow the gap with EU, to continue to converge with EU in real terms. And we will achieve that. The key to this is education reform, equipping people with skills needed for new world. Age of robotics. We have to, and that's why labor market reform comes in. That's why the education reform comes in. Productivity. The best way to, well, the only way to boost productivity is to do structural reforms, invest in infrastructure, and more competition in all product markets. This is the productivity index over the last decade, meaning how it fared. So in terms of overall productivity, we are among the lowest in OECD. Remember, I showed you a chart earlier on. But this chart tells you that over the last decade, Turkey has been one of the top countries in terms of enhancing productivity. So increase in productivity. This is the good news. That means we are on the right track, but there is a long way to go. This map of highway, I could show you the same map with railways. The top map is pre-Justice and Development Party. Turkey's dual carriage highways, motorways, meaning multi-lane roads. The top one is January 2003. The bottom map is December 2015. As you can see, we've done reasonably well. Now we're doing almost the same thing we're going to be doing over the next decade or two on railways. We're going to privatize, prioritize railways. We have privatized. Thank you. Actually, we passed the law that liberalizes and allows private entities to run railways. So I didn't say anything that shouldn't have said it. But we are going to prioritize. We're building high-speed networks. Chinese are now talking about the modern Silk Road. And Turkey is going to be a major part of that. In fact, we're going to be doing our own part well before China has done the rest, because our infrastructure is almost ready. We've already connected the two continents. Marmaray project is under Bosphorus, a rail link. That way, essentially, you can get on a train now, go all the way to London. And hopefully, one day, you can get on a train from Beijing and come all the way to Istanbul and then London. Private sector investments has improved. Now, we must be doing something right. The number of international companies operating in Turkey has gone up from about 5,000 to 46,000. And FDI inflows, between 1980 and 2002 were total of $15 billion. Now, over the last, just over a decade, we've attracted over $160 billion. So we're not perfect. We must be doing something right, but there's a long way to go. So that's the Turkish story. The Turkish story is a complicated one. Last few years, there's been a lot of political noise, a lot of domestic issues that we have to deal with. And the perception, got affected. Our neighborhood is a tough one. And unless you sit on the fence on every single issue, it's not easy. And we don't. We've been very vocal, and it's complicated. But I can tell you this. The fundamentals are still strong. We have issues, but we have a very good roadmap how to address those issues across the board. And, we do not pretend that we are in good shape. We've done well, but there is so much to be done. And we have a great opportunity to do so. We have a strong majority in the parliament. We have a roadmap. And it just takes consistent effort to begin to deliver on this. And let's hope we deliver 65, 70%. And that would put Turkey back on a high growth trajectory of average of about 5% in real terms. And that would mean that we'll catch up with EU averages within the next 20 years. We don't have to wait for 120 years. So that's my story. Thank you very much for listening to me.